Hi everyone. Just a quick one from me. My thoughts on this big spend on AI, the so-called AI bet, and how this links to Chinese investment. So Reuters and Guru Focus, Yahoo Finance have released a couple of articles recently about AI's massive spend. And here's my 2 cents. Okay, so a quick overview in case you can't be bothered to read it. Then I'll move quickly on to AMD. Amazon is increasing its capital expenditure to 100 billion in 2025, primarily focusing on AI growth through AWS. This investment will support data centers, networking and equipment, hardware for new AI products, such as the Trainium chips, the Nova models, etc. This obviously occurs amidst, mixed Q4 results and a cautious kind of sales forecast. Amazon see this as a once-in-a-lifetime business opportunity to improve delivery speed and reduce costs, while Google planned to invest approximately 75 billion in capital expenditures, with a majority allocated to improving AI infrastructure. The investments aim to meet increased demand for Google's cloud AI services and manage infrastructure efficiency. Google's CEO believes this will drive revenue through native ad concepts and accessible AI tools for businesses. However, it should be noted, investor skepticism followed the earnings call, with shares of Alphabet dipping slightly, despite obviously cloud services contributing significantly to revenue. Other industry rivals also increased capital expenditure, Microsoft targeting 80 billion and Meta roughly spending about 65 billion this fiscal year. So what does this have to do with the Chinese? Well, Chinese investors are investing in AI stocks in China. This is driven by DeepSeek's revelation and nationalistic sentiment amidst trade tensions with the US. DeepSeek's large language model, which is ostensibly cheaper than some developed by US companies like OpenAI, has boosted AI stock in mainland China and Hong Kong. Thus, there's more money flowing in AI stocks in China. Goldman Sachs anticipates AI breakthroughs in China could significantly impact the stock market in the US, where potential earning increases and value uplift will go to Chinese firms. Okay, so what does this have to do with AMD? Well, I can see a lot of people being negative to AMD at the moment, and I think it's a little bit over the top. Most of the people complaining bought when it was at its peak and mentally cannot handle the fact that the price is gradually falling. Look, my advice to anyone that's got AMD stock, and I suppose it depends on where you bought it. But the only reason to get out right now is that there's a bigger opportunity and that you don't have the time and money to wait until the price gets back to something a lot better. But you need to remember that most stock market investment is essentially good market, good fundamentals, or seeing something that Wall Street isn't just yet. But you can never tell when that something will happen. No one can. If anyone is saying they can, they're BSing. There's just too many variables, too many things to understand, which basically means that you're investing under the wrong assumptions. AMD has positioned themselves well from a technology standpoint. We need to understand that most companies still haven't integrated AI into their company, or have only started doing it from a very small scale, which is taking a small task, essentially experimenting with it to see whether it actually helps that specific business case. So therefore, we're only in the early stages, generally speaking. There hasn't actually been a huge uptick of AI used in most companies. Now, the other thing is that Lisa Su, the AMD CEO, has predicted 10 billion for the data center in the next couple of years. But let's actually look at the numbers here. Meta bought 173,000 of AMD's MI300 chips last year, while Microsoft bought 96,000. Now, if we do a back of the envelope calculation based off the forecasts that they're supposedly going to spend on kind of AI expenditure, if Meta spend this 62 billion and we take their 2024 value, that's 62 over 35 times 173,000, we roughly, rounded down, get 300,000 MI300 chips. Now, they will obviously release a newer version, which I think they've already brought up the date. But this just gives you a feeling for the figures. Each chip is probably in the region of 10 to 15,000. Microsoft plan to spend 80 billion. Now 80 over 55 times 96,000 roughly gets you to about 140,000. But how much is that in actual revenue? So extrapolating it out with each chip being roughly between 10,000 and 15,000, that gives you 2.7 billion for that year from the data centers from these two customers. Now there's other customers that AMD have got that I'm not even talking about. So bear this in mind. 2.7 billion will roughly rise to 4.4 billion. That's 1.7 billion of increase if we assume the price points are the same demand curve, etc. So realistically, we should probably take about 25% off of that margin of error. So that gives us 1.3 billion this year. That's a 48% increase, because obviously it would be foolish to take that number just as is. And remember one other thing. Unlike Microsoft and the others, Meta and AMD's cultures are aligned. There seems to be a good feedback loop there. A good willingness to work together. I mean, from a personal experience, I can tell you how much that makes a difference. Having worked with different groups, with different culture, you wouldn't believe how much politics leads to bad results from engineers and from a product perspective. So I actually think that Meta spending more money has a way bigger impact than Microsoft spending money, because what it does to the product. For AMD, it both helps AMD and it helps Meta. Oh, that's some food for thought, chaps. If you're thinking about exiting AMD, maybe you should take a look at these numbers. Now, obviously, I am making certain assumptions, but it's still worth bearing in mind before you just decide to go a different direction. Anyway, that's it from me. If you found this useful at all, please subscribe.